Welcome to Trading Nation. I'm Sara Eisen. Take a look at Alphabet, leading the entire tech sector lower today on Tuesday, despite posting a big earnings beat. The stock pacing for its worst day in 2.5 months, weighing on tech in general and dragging the Nasdaq 100 within inches of correction territory. Is there more pain ahead for big tech? Stacey Gilbert is with Susquehanna, and Matt Maley is with Miller Tabak. Matt, you're looking at the chart. What do you see for tech and Alphabet?
Well, for the tech overall, the one thing we worried about, a few days ago when we saw the semiconductors kind of roll over pretty hard and they were down 4 or 5%, the rest of tech was holding up pretty well, whether it be the FANG stocks or the XLK tech ETF. Now it's those have followed the stocks or the semiconductor stocks lower. So that's a concern. The key is going to be, and then we look at Google in particular. I mean, of course, they reported earnings. It rallied last night initially, but it's rolled back over. And it's broken its 200-day moving average and its trend line going back to 2016. However, the key level is going to be the 1,000 level. That was the old resistance level. Now it's become new support. If any kind of break below that, it's going to be a big problem. And I think across the tech area, the one thing you're going to be looking at is those February lows. If we break below those, it's going to be a big problem. If they can hold them, it should be a much better situation.
Stacey, what's wrong? 24% net revenue growth, not enough to impress the street? Or are these stocks just priced for perfection?
Yeah, it's amazing, right? Well, obviously, with Alphabet in particular, the expenses continue to be a concern. And we do cover it at Susquehanna. Our internet analyst, Shyam Patel, covers it with a positive rating, a 12.50 price target. So he does still see upside from here, call it 22, 23%, depending where the stock actually closes today. There are some positive catalysts out here, as Shyam would highlight, some of them being continued ads and obviously YouTube. So there are areas that we see as positive catalysts, but we do see this as a longer term story because investors are concerned about the expenses. What's interesting is when we overlay this, what the options market is telling us, it's pretty consistent with what Shyam Patel, our analyst, is also saying. It's becoming more of a wait and see type of story. There is not a ton of interest in investors coming in, stepping in, saying, listen, Alphabet's overdone. I want to buy it here on a pop. If anything, where we do see the most interesting flow is investors selling downside puts, what we would call underwriting, really drawing a line in the sand of where they're comfortable getting into Alphabet if it were to pull back. And if we kind of tie that together with Shyam Patel's downside risk limit, he sees that as 930. We are seeing sellers across multiple strike levels, 930 included in Alphabet. So we do think downside is fairly limited, but it is much more of a longer term play.
Yeah, a little more to go here, guys. Thank you, Stacey and Matt. Thanks for joining us today. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.